Welcome back, traders, to the next video in this course. Now, in this video, we're going to be talking about divergence, what it is, how it works, and we're going to be looking into an indicator called the RSI, which we can actually use with the concept of divergence, to give us an additional confluence when looking for trades in the market. Now, what actually is divergence? Well, divergence is when the market moves or diverges in the opposite direction to what a technical indicator is suggesting. So for example, on the screen, this is what we call a technical indicator, This is the RSI, which stands for Relative Strength Index. Now, if price action is making higher highs, the indicator will make a lower high, and this will then show us divergence and potential reversals. Now, there's two types of divergence, What we like to use is either reversal divergence or continuation divergence. Now, reversal divergence, is the process of price action making higher highs, but the RSI making lower highs. And this will show us a divergence between both price action and the indicator. Now, with continuation divergence, price making a lower high in, say, a downtrend, and the RSI making a much higher high, shows overbought price action, and possibly a continuation bearish. So you can see how there's two ways in which we can look at the divergence between price and an indicator such as the RSI, but first of all, what I'm going to do is explain to you what the RSI is, what it actually measures, and how it's actually displayed to us on the charts. And then we're going to get into the divergence side of things and look at the ways in which we can actually spot these reversal divergences and also these continuation divergences. So what actually is the RSI? So as you know, the RSI is the Relative Strength Index. This is what it looks like on the chart. Now, what it's actually plotting, is it's a momentum-based indicator. So it's designed to indicate whether something is either overbought or whether something is oversold. And what it's going to do, is it's going to plot that information, in this sort of chart form. And what it's going to do, is it's going to show us areas of overbought and oversold price. And the way it does that, what it does is it measures, average price gains and average price losses over a period of time. Now, we've got this set, as a 14 period. So every 14 bars, it will measure, the average price gains and average price losses, and then it will plot it onto the graph. Now, the graph moves in a range of 0 to 100, so as you can see on the right hand side, you've got 0 down the bottom here, and you'll have 100 right up here, and then what you'll see, is price will stay within this 0 to 100 range, and it will plot on price movements, showing us the momentum in the market. Now, we've got two lines on the chart, we have the RSI upper band and we've got the RSI lower band. Now, the RSI lower band, runs along the 30 line, as you can see, it's running along the 30 point, and the top band will be running along the 70 point. So everything above the 70 line, will be the top 30%, and everything underneath the 30 line, will be the lower 30%. So whenever you see price either underneath this bottom line, or above the top line, what it's showing us, these are the extreme areas of momentum, It's showing us the either overbought price or it's showing us the oversold price. And what we can do, is make that assumption that when price is being seen as overbought, for example, we're likely to then see a reversal in the opposite direction. And then when we see price in the oversold areas, we can again expect some kind of reversal in the opposite direction. Now, that isn't the only way in which we trade this line, and we're also going to be looking at how price actually displays itself and how the RSI displays itself in terms of higher highs, higher lows, and then obviously lower highs and lower lows. So, there's a few different ways in which we're going to be looking at this, but that's pretty much sums up what the RSI actually is, It's a momentum-based indicator, and what we're going to be doing is looking at how it plots on these different highs and lows, and how it actually compares to real price actions, highs and lows. And what it's going to do is it's going to create a divergence in price, and that is what we're going to be looking for okay, to spot potential reversals or continuations. So now we know exactly what the RSI is, okay, and the way in which we're going to be using it to spot our divergences. Okay, let's talk through the ways in which we're actually going to be looking for both the reversal and the continuation divergence. So let's get into that now. Okay, so when we actually talk about the concept of divergence, what we're going to be focusing on, okay, is looking at the trending markets, either bullish or bearish, and we're going to be comparing this to the RSI. Now, well, first of all, what we're going to do is we're going to focus on the reversal side of it, okay? So we're going to be looking for reversal divergence. Now, in a market, okay, what we're going to be looking for on the price action, okay, is for price to be creating, okay, a series of higher highs, higher lows, okay? And price is going to be moving, you know, like we know in an upwards moving market. Now, on the RSI, okay, what we're going to be looking for is a slightly different situation. So on the RSI, what we're going to be looking for, okay, is price to show these higher highs and higher lows, okay, but eventually what we're going to want to see, okay, is instead of making a higher high, is that we start making a lower high. So what we'll see is this happen, okay, and now when we see this happen, the difference is that here you can see that price went on to make a higher high. Whereas in this example, instead of making that higher high, what price did was it made a lower high. So by seeing this lower high here, but seeing a higher high on the actual charts, okay, this is showing us a divergence. Now, why is this a divergence? Well, because they're doing different things, okay? On the chart, it's showing us a higher high, okay, but it's not showing us a higher high on the RSI. Instead, it's showing us a lower high. So because of this, okay, what it's showing us is that that momentum, okay, is starting to slow down in the market. So in this area here, okay, even though we're seeing a higher high on the actual real chart, by seeing that we're actually creating a lower high on the RSI, it's indicating to us that there may be a reduced amount of momentum in the market, and it can actually predict ahead of time that price may be ready to start a bearish move. So then by seeing that, what we'll be able to do, okay, is keep an eye on actual price action in these kind of areas, and then we can make that decision of, okay, well, if we start seeing perhaps a move bearish now, okay, we can now predict that if we were going to come up, okay, back into an area of, say, you know, break and retest, support, turn, resistance, we can then trade this to the downside because our RSI indicator, okay, has created that divergence, and it's predicted ahead of time that there's a lack of momentum in the market, okay, and it's likely to see a move to the downside. So this is how we're going to be spotting, okay, our reversal divergence, and it's all about looking for the difference between, okay, creating a higher high and creating no more higher highs, okay, but instead now lower highs. Okay, so that's the key to the reversal divergence. Now let's have a little look at how we can actually trade a continuation divergence. So with a continuation divergence, okay, we're going to be looking for still a divergence between both price action and the RSI, okay, but just in a slightly different way. So say, for example, okay, we're trending down, okay, price pushes down, pushes up, okay, pushes down, pushes up, okay, and now we're expecting that price is going to be continuing to the downside. So let's just say the price looks like this right now, okay? Now again, if we were looking at this, okay, on our RSI, the difference here is that what we're going to be seeing, okay, is price push down, push up, push down, and then instead of creating the identical lower high, what we're going to then see is price create a higher high. Now if price creates a higher high in a situation like this, okay, what it again is showing us is that divergence. Now what is the divergence? Because here you can see that we have, you know, a lower high and then another lower high, okay? Price isn't breaking to the upside, it's continuing to hold this high here, and it's putting in another lower high. So it's going to potentially, you know, continue our phases of the market of impulse, correction, impulse, okay? And we can at the moment look like we're going to be trading this to the downside. Now, if we can find an area of price action like this, and we can match it in with the fact that we're creating divergence on the RSI, okay, by the fact that we're creating a higher high in price while we have a lower high on the actual price chart, okay, this is showing us divergence. And what it's showing us, okay, is that price is beginning to be exhausted in these areas in here, okay. There's clearly overbought price action, okay, and if you can time this right with the fact that price may be in an area of continuation, okay, what we can then see is that on this chart, okay, price will then continue to push to the downside, okay, and then we will then see, as predicted, what we initially thought was going to happen, okay. Price will become overbought in areas like this, okay, and then you'll see that shift in momentum, okay, and it will then continue this idea to the downside. So this is how we can go about actually trading the elements of continuation divergence, okay, and we also now know how to trade reversal divergence. And it's all about using the indicator with price action, being able to read both of the two, okay, and looking for the differences, okay, when one's showing one thing and the other one's showing another. We then see that divergence, okay, and then it can give us an early indication that price may be looking to either reverse or potentially looking to continue in a particular direction. So now we have a bit of an understanding, okay, about how divergence actually works. Let's bring this concept to the charts now, okay, and we'll start by looking at reversal divergences with some real life examples. So let's get straight into that now. Okay, so the first example we're going to look at, okay, is if we just look straight on the chart right now. I've got the 1 hour time frame up here, okay, and I've also got the RSI down here. So what we're going to do is just going to talk through what price is actually showing us, okay, at this area, and how it actually can result in a reversal divergence. So first of all, okay, what can we see on the actual chart? So what I can see, okay, is that price has broken this low level in here, okay, it started to push to the downside, it's pulled back up, okay, and then we've got this low level in here, okay, and you can see that we've just broken this low in here. So if we were going to actually look at this, okay, on a high and low basis, what we would be saying, okay, is that price currently, okay, just created a lower low, okay, so the lower low is in here, okay, and now we can expect that price is starting to trend to the downside. Now, if we take a minute, okay, and look at the RSI at the same price point, okay, what are we seeing? Now, straight away, okay, I can see that if this is our low, okay, this will be the high, and at the moment, okay, we failed to take out this low. So right now, okay, already we're spotting a form of divergence because price is yet to take this low out, okay, and at the moment, what it's done is it's put in a low, and now it's put in a higher low. So on the price chart, we're seeing a lower low, and on the RSI, we're seeing a higher low. So right now, okay, this is showing us a form of divergence. So now that we actually see this divergence is happening, we've got two options. Now price could either, okay, play the next few candles out, and we'll see that price eventually goes on to make that lower low, okay, and this could continue moving bearish. However, what else could happen, okay, is that price could go from, okay, moving bearish, and this could actually start to put in a higher high. Now, if this happens, okay, we've got a clear sign of divergence, and that is then when I'm going to be looking to get involved in this area in here, okay, for potential long trades, because it's indicating to me that the momentum to the downside is starting to run out, okay, and it could be showing us early signs of reversal. So let's start playing out some candles, okay, and actually see what happens next.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
So we keep playing, okay, and straight away we see this up candle in here, okay, and now look at our RSI. Now our RSI is completely shot to the upside, okay, so it's showing us now that there's clear momentum pushing to the upside, okay, it's failed to take this low out. So even though we've taken the low out, it's telling us an early indication that price may be ready to reverse. So if we can see this, okay, now what we want to actually do is try and find a way in which we can actually get involved in the market, okay, and that'll probably start by being able to trade above this level here, for example. Okay, so if we keep playing out the candles now, okay, what can we actually see happening next? So there we go, okay, price starts to break up, Okay, and at this point you can now see, okay, that the RSI is starting to pull back. So this, at this point, okay, this could indicate to us potentially, okay, that price is going to continue to the upside. So we'll see, and we'll wait and see what happens next. And there we go. Okay, so now we can see the price is broken in here. Okay, it's pulled back and then it's broken to the upside. So, you know, if we were looking to get involved in this situation, okay, what would we do is we'd probably look for either this low test candle in here to trade. Okay, we'd probably trade some kind of break and retest before then the move continues to the upside. So you can see that, you know, the clear divergence, okay, from this low in here, okay, and this low in here is clearly what is pushing this to the upside. So ahead of time we were able to predict that price could be reversing, okay, and then there's obviously a number of different ways that we could actually get involved in this trade, okay, and it's just about picking the way that you want to get involved. Either you wait for, you know, a break of structure and then you look for some kind of retest back into the areas, okay, some kind of level of support, or, you know, you could use some kind of candlestick structure, you could use a certain candlestick pattern. Okay, there's a number of different ways you can actually trade these divergences, okay, but right now we're just talking through how the divergence actually works, okay, and the way in which a lower low and a higher low, okay, can create a potential reversal, okay, and then price continues to move sideways, okay, and there we go. So then we know just from this area, okay, that price continued to push higher and higher and higher, okay, and that then clearly showed the divergence between the two and then a move to the upside. So this is a really, really good and clean example of that divergence playing out in a particular reversal situation. Okay, now let's have a little look at a slightly different situation. Okay, so again, this is a slightly different situation, okay, and in this example, what are we looking at? So straight away, first thing I see, okay, is that price is starting to push in here to the upside. Okay, we've had some kind of pullback and some kind of scoop in here, and then we've kind of started to create this double top in here. We haven't quite impulsed yet to continue the move to the upside. Okay, so right now I'm not sure whether this is a reversal or whether we're going to continue to see impulsive movements to the upside. Now, where are our highs and lows if we were going to track them? Okay, now this initially was the last high point. Okay, so if we draw a line across this high, what we can see, okay, is price has just started to break above those levels in here. Now, if we then plot the RSI version of that, what can we see? Well, this high point in here, okay, is represented by this high point in here. We then look at this high point in here is represented by this high point in here. So we can see that there's a clear, okay, divergence in price where on our actual price chart, it's creating a higher high, whereas on our RSI, it's created a lower high. Okay, so there's clear divergence here because this is trending up, okay, and this has started to trend down. So there's a clear divergence there. There's a clear indication that momentum may be running out, okay, and it's being displayed on the RSI. Now, what else can we see in this particular area? Well, we're also, okay, in the top 30%. Okay, so as you can see, we're above the dotted line. Okay, we're above the dotted 70 line. We're right up here. Okay, we peaked very extreme at 80. Okay, so you can see the price is very, very clearly overbought from our RSI. So it makes sense that price has then given us, okay, that lower high, which means, okay, that we're going to get further moves to the downside. So again, how do we look to get involved in this? Well, you know, you could look for potentially, okay, this low to go first and then see, you know, how you could potentially get involved. So let's see, do we continue to push higher, or are we going to continue that plan that we have thought of? Okay, so there we go. See, so the plan we thought of was that price was going to start to move to the downside. Okay, now the RSI has moved all the way down to here. Okay, so and it's almost reached the 30 line. Okay, so it moves, you know, much faster than actual price action does. But now looking at this, okay, we could say, well, if we retest back in, okay, potentially areas such as this, okay, this could be a good place to get involved in trades. Okay, and then what we could do is then trade this to the downside. So this would be our kind of indication. Okay, we've had the clear lower highs put in, okay, and we had the higher high, we had the divergence, and now we've had the breakout. So let's say, for example, we got involved in an area such as this, and let's just see what happens. So price comes in, okay, it tests these areas, it starts to wick away, okay, and then there we go. Okay, we start to see a push to the downside. Brilliant. A little correction in there. Okay, a consolidation. Okay, and then we're going to continue. We've already almost reached 4R. And there we go. Okay, we get another little push to the downside. So in this situation, okay, it was a clear indication that price was going to give us, okay, that move lower. There was a clear divergence, which is how we can actually, you know, work out when these trends are finished or not. Okay, and it's by saying, okay, well, we're in that top 30%, so, you know, we may see some kind of reaction to that. We're also seeing, okay, the lower high being put in, okay, and the higher high on our actual price chart. Following then, we then get a break and retest and a trade to the downside. So, of course, you know, I wouldn't just trade you know, these divergences on their own. I'd like to back them up with some kind of structural elements, whether that's, you know, break and retest, support and resistance, you know, continuation patterns, candlestick patterns, everything that we've already been taught. Okay, using this divergence and the RSI is just a great way to give us that additional confluence, okay, that price may be reversing, and this is how I would go about using it. So now let's have a look at a few examples, okay, of a continuation divergence, okay, where it's going to be showing us a particular trend, and we're going to be looking to continue that trend in a given direction, and using the divergence of the RSI to give us more confluence, okay, and more reason for that trend to continue. So let's have a little look at that now. Okay, so the first example I want to show with a continuation divergence, okay, is this example here. Now, if we look at the chart, okay, we can see that price is clearly starting to push to the upside. Now, if we marked in, okay, where we had a break of structure, you could see that we technically kind of broke out in this area in here. Okay, and now this is kind of our high, and this is our low. And we would be expecting, okay, some kind of pullback and then a potential move higher. Okay, we may come into this area in here, okay, and we'll see some kind of break and retest, or we may end up mitigating deeper into this area, okay, maybe even testing this kind of area of support, maybe on a lower time frame. Okay, it completely depends how we actually set up, but the general rule of thumb is that, okay, we've gone into a higher high, okay, and this will become our low. Now we're looking for a pullback to create, okay, that higher low, and then we're going to be looking for a move to the upside. Now this would be the general rule. So what we're going to do now, okay, is have a look at the RSI, okay, and see how it currently compares, and if we then see some type of divergence. So if we have a little look, okay, right now this high in here, okay, is being marked up as this high in here, okay, and you can then see that this low in here would be seen as this low in here. So right now, okay, we want to see some kind of pullback in here, which would mimic some kind of pullback in here. Okay, however, for the RSI to diverge, what we'd want to see, okay, is this to break lower while this holds, okay, and then start to move to the upside, okay, and then this will then follow to the upside, and that will then show us that we had that divergence in price, okay, and then we may then see that move higher. So that's kind of what we're looking for. So let's see how price plays out. So if we just have a little look, what happens next? So price starts to push down. Okay, now keep an eye on the RSI, okay, because it moves much faster than our actual price chart. So we play the next candle, okay, we get this large push to the downside, and look what happened to the RSI, okay, it's gone completely all the way down, it's broken all of these lows, okay, and you can see that we've had a clear break in here, okay, putting in a lower low. So right now, what you can see is that we've got a lower low on the RSI, but we've currently got a higher low on our actual price chart. So right now we are creating that divergence. So if I had confirmation, okay, or a reason to continue this move to the upside, okay, that would now be a reason why I would take this long, because we're seeing that divergence, which is obviously an additional confluence. So if we keep playing price out, what happens next? So price C, it starts to bounce off, okay, it starts to push back up, okay, the RSI starts to climb with it. We then consolidate around, okay, we're becoming quite corrective. So right now, okay, it's looking quite nice to move back to the upside. Okay, I just want to see potentially, okay, either some kind of, okay, larger kind of continuation pattern, or maybe even a smaller reversal pattern, okay, and then a move higher, because obviously we've had the divergence now, so we just want to see that kind of confirmation on a lower time frame to actually get involved in long trades. Okay, so now we've pushed down. Okay, well now we're seeing actually a double bottom form. Okay, so now we're seeing a double bottom in here. So now this is looking quite good to move to the upside, because if we looked at these smaller phases of the market, you would say that we've got an impulse in here, and now we're seeing a reversal structure. Okay, obviously it's part of this larger impulse in here, which is why we're trying to play this pullback for a continuation higher. Okay, and we're also then, that also ties in with this divergence in here. So now we've had this kind of doji candle in here. Okay, I would be looking to get involved in the market if we saw some kind of engulfing bullish candle. So what happens next? Okay, we get another small candle, a few more corrective candles. Okay, another drop down. Okay, and there we go. Okay, now we get a nice bullish engulfing candle. So at this point in time, okay, we could put a buy on here. Okay, stop underneath here. Okay, and then we would then target our profit moving higher. Okay, because this is then showing us, okay, a clear divergence. Okay, and we may now see a potential continuation. So let's see what happens. Okay, so price tabs in, and there we go. Okay, we start to consolidate around, and then we break to the upside. Okay, so we were able to predict that this impulse in here was going to continue, okay, with an additional impulse, all because we were tracking the lows, okay, and the fact that we had a break, okay, of that low in here, it was telling us, okay, that price is starting to be exhausted in these areas in here, okay, and the fact that this is holding is telling us that we may see a continued push to the upside. Okay, so this is a clear example of how we would go about trading a continuation divergence. So let's go straight ahead, okay, and look at the next example. Okay, so now let's have a little look at this example in here. Now what we've got, okay, is a bearish trend. You can see that we've got a nice, okay, impulsive move just in here, okay, and if we were to mark on our highs and our lows, we would look at this kind of being the top level, okay, and we would see that this is currently the bottom level, okay, and again, you can see that the RSI is showing it as this level in here and currently this level in here. So if I was looking at this, okay, obviously I'd be looking at this kind of area in here for a potential area of break and retest, okay, price breaking down, coming back up, and then looking to potentially sell it in here to move lower. Now that's the basic concept of the impulse correction impulse, and how would we need to see this on the RSI, okay, for it to be some kind of divergence? Would of course, okay, if we are looking for a lower high in here, okay, we're looking for a high, lower high, obviously on the RSI, we're going to have to see some kind of higher high, okay, and if we see a higher high and a lower high in a potential break and retest zone for a continuation lower, this would be a perfect example of a continuation divergence. So if we start to play price out, okay, let's just keep an eye on our RSI, okay, and also on our price chart, and just see what happens next. So, okay, as price starts to consolidate, we start to pull back up, and look at the RSI, okay, the RSI is starting to fly up now. Okay, we don't quite reach our zone. Okay, well now we're actually in our potential area of support turned resistance, okay. We haven't actually seen any kind of divergence yet, okay, so you know, we may actually see that price will move a bit higher, okay, it may consolidate around a little bit more. Obviously it's not quite enough of a confluence yet to get involved in a trade, so we'll just wait and see what happens next. So okay, now that we get another up candle, okay, and here we go. Let's now, if we look at the RSI, what can we see? So as you can see from the RSI, price has now broken our high level. So now price has broken the high, but price here is nowhere near the high. So because of that, we can see that we've now created divergence. We're coming into an area of potential break and retest, okay, and we're also seeing a divergence now. So what we want to see now, okay, is price start to reject away from, okay, this area with potential down candles or, you know, bearish candlestick patterns, okay, to confirm this idea that price may be continuing to the downside, because we've now got that additional confluence, which is the continuation divergence. So if we keep playing price out, what do we get? Okay, and now we get this nice bearish down candle. So this would be a great, okay, time to get involved in a potential trade. What we could do is we could enter potentially at this up candle in here, price, okay, stop above the high, something like this, okay. I mean, if you want to be really safe, you could just literally buy at the candle, stop above the high, and then you'd be targeting something down here, okay, for a potentially 2-to-1 risk to reward, something near maybe this low in here. So something like that, okay, and we'll be expecting some form of continuation. So if we then play price out, what happens next? So there we go. Okay, we get that retrace candle which taps into the up candle. Okay, price consolidates around, a little move to the downside. Okay, are we going to break the low? Okay, price comes down, price comes back up again. Okay, and in this situation you can see that we actually get stopped out. So you can see the price doesn't actually continue completely. However, we did get still that initial move to the downside. So the initial move, okay, of impulse, correction, impulse was still valid, okay, because you can see that we had a clear move down, move up, and a move back down. However, it didn't want to continue that move even lower. Now, one thing I didn't mention, okay, when I was showing this trade is where we actually were, okay, on the scale of 0 to 100. And if you have a little look at where we actually are, what can you see? So in this example, what you can actually see, okay, is that where I was looking for a continuation, okay, was actually in an area of oversold price. So because we're actually trading just under this 30 level, okay, as the initial push down, this is indicating to us that, you know, price is potentially oversold, and what we should be doing, okay, is looking for potential reversals. Now, you may still be able to get some kind of shorter term, okay, trend to the downside, but overall, okay, I would probably avoid taking, you know, continuation short trades when you're in these, you know, these 30% zones, because it's clearly not the best areas to be taking trades, and it's trying to show you that your trade idea may not go the distance because we're in an area of oversold price, and that means that, you know, we may need to start pushing back to the upside now. Okay, so as you see, we then, you know, completely break up, and that whole idea, okay, actually becomes null and void. So because of that, okay, what we should have been doing, okay, is actually looking for potential long positions. Okay, so in this situation, what we should do is realize that, oh, okay, so we're in an area of oversold price. So what is price action actually doing, okay, and how could we potentially trade this for a potential reversal? Well, if we just have a look at the RSI, okay, and see what is actually happening, what's the next thing we actually do? Okay, so if I now take this trade off and we just continue to look at the highs and lows, okay, what is price actually showing us? But what we can see, okay, is that in this area here, okay, you can see that price makes a lower low. Now, this low point in here, okay, is marked up on the chart as this low point in here. Now, the fact that we then break this low in this area here, however, we don't actually break the low on the RSI, is another additional idea, okay, that price may be looking to reverse. Because now what we're seeing, okay, are those higher lows, but on the price chart what we're seeing, okay, are lower lows. So what we need to be able to recognize, okay, is that price is in an area of oversold price, and we're now seeing, okay, a divergence in the opposite direction. So now if we were now seeing this, what I'd be looking for are up candles, okay, or a potential, you know, break and retest. You're not always going to get that, but there's always going to be, you know, some kind of way in which you can get involved in a trade, okay, using our candlestick patterns. So by seeing, okay, that we're in an area of oversold price, we're getting the divergence now, okay, now we want to look to get involved. When we then see, you know, a nice up candle like this, okay, you could wait for potentially this down candle to break. Okay, maybe you don't trade it, maybe you're here and you wait for this area, okay, of break and retest. Now that would be quite a good area to get involved in a trade, okay, and they don't always play out. Sometimes price just starts to impulse to the upside, but that's the kind of thing I would look to get involved in, okay, something like that. You know, you can see the price is very impulsive, okay, and again, if you just watch the RSI and price action, you can see that, you know, even in here it was an area of oversold price, and then what do you see? We start to see price move back to the downside. Okay, it's always kind of reacting to those extremes. Okay, we're looking for the continuations kind of in the gaps in between. Okay, and if you're able to spot an area like this, okay, exactly the same thing again, overbought price action in this area in here. Okay, and then what happens? Okay, price starts to move away from this extreme line. Okay, so we're probably expecting some kind of move down. Okay, and there we go, price starts to move down purely because we're in this area of overbought price. Okay, then what happens? Price straight away goes into the area of oversold price. So again, you could expect price to probably pull up slightly at some point soon. Okay, because, and there we go, see already price has started to react in here. okay, you can see that we've actually created some kind of consolidation in here now, okay, for the move away. So remember, it's only once price moves away from this area, okay, then it could continue lower. Okay, if price is in this area, just expect it to move away on the RSI. That doesn't necessarily mean that price is going to move away on the actual price chart, okay? But however, okay, if you can read the, the continuations and the reversals on the chart, okay, you'll be able to get some kind of idea of what price is actually doing, okay? So it's clearly, you can see how this RSI can work with our price and the ways in which we can trade divergence as an additional confluence. Of course, we don't want to trade it on its own because, like you said, you have to have other additional things going with your trade idea because it's never going to be 100% accurate. So you want to make sure that you're really, taking high quality trades with a number of different reasons for that trade. Okay, and these reversal divergence signals and these continuation divergence signals, okay, are a great tool to add to your arsenal to be able to use when trying to frame up a trade idea. So I hope you guys all understand now the concepts of divergence and the ways in which we can use the RSI. Feel free to have a look at this indicator for yourself, put it on the chart and look at the ways in which price action reacts with the RSI, okay? And I hope you guys have all taken something valuable from this episode, and I will see you all in the next one, so you don't want to miss it, and I will see you guys there.
Be a dork.